Hi, everyone. Get ready for the How I Raised It podcast, the show where you get an inside, unfiltered look at how real entrepreneurs raise capital for their businesses. I'm your host, Nathan Beckard, and thank you for tuning in to today's episode with David Rabie of Tovala, an AI-powered oven and meal kit subscription service. We talk about raising capital for hardware startups and all the challenges thereof. If you're tuning into this podcast to learn how to raise capital for your business, I've created a super valuable free welcome pack for you. It includes a list of 2,500 investors who don't require a warm intro, plus 200 of the most important questions that serious investors are going to ask you. So this will really help you get prepared so you can rock your fundraise. To get this instantly, click the link in the description to get access. It's free, and you'll be really ready to pitch with confidence. Last but not least, if you enjoy this conversation and think someone else would too, please share this with them and hit that subscribe button to get the latest episodes. Until then, enjoy the chat with David.
Welcome to How I Raised It, the podcast that goes behind the scenes with entrepreneurs who've raised capital. We uncover the tips, tricks, and techniques they use to get investors to write a check. Strap in and turn it up.
Hi, welcome to another episode of How I Raised It, produced by foundersuite.com. Today I have David Rabie of Tovala coming to us from a cold and rainy Chicago. How's your day going?
Pretty good. Thanks for having me.
My pleasure. Yeah, well, we're recording this. It's almost June, Memorial Day weekend coming up here. So what happens in Chicago on Memorial Day weekend on a cold, rainy Memorial Day? Anything?
I don't know what people are going to do with this kind of weather, but it should turn by Sunday or Monday, and I think people will be out on the lake and things are coming back to normal in Chicago. So I think there will be a lot of people out in restaurants and on the streets and all that.
Good. Well, you given what you do, you probably don't want people out in restaurants quite as much. So maybe let's start with that. What do you guys do at Tovala?
Yeah. So, we like to think of Tovala as your secret weapon in the kitchen. We combine a smart oven with a chef prepared meal service. And the idea is that you can get home cooked food without any of the work. So we send you pre-prepped meals where a lot of the ingredients are completely raw. And we ask you to do about a minute of work, maybe adding a seasoning, stirring something. You scan a barcode under the oven that we've built for our meals. And within 20 minutes or less, you've got a home cooked meal. Your home smells nice. Food will come out crunchy, crispy, super hot, like all the things that a home cooked meal would be, but you don't do any work. And then, after you've eaten your meal, no cleanup required. So that's kind of the product.
Interesting. Okay. Let's take it apart a little bit. So you're selling the oven itself, what's the form factor look like, just for anyone, kind of listening?
Yeah, it's about the same size as a toaster oven. So for anyone that's got a toaster oven, if not, if a microwave is your comparison, it's a little smaller than a microwave. And it does everything a standard toaster oven would do. So you can toast bread in there, you can bake cookies, you can roast broccoli. And because it's a Wi-Fi enabled device, it comes with a mobile app that's got about 150 recipes on there if you want some help cooking. And then there's also frozen grocery products that you can scan the UPC code on. The oven will cook those automatically. So there's a lot of different things you can do with the product. And that's why it becomes so habitual for people and kind of the most used appliance in people's homes.
Okay. Interesting. And then, so there's that physical hardware component piece, and then the meal service, which I assume is a subscription service, or how does that work?
Correct. Yeah, there's a meal service that is a huge part of our business. We've got a team of chefs that design new recipes every single week, and then a couple production facilities where we're making the food ourselves and distributing them across the country. Every week, there's about 18 different items on the menu to pick from, all across the board. Different protein dishes with trout, chicken breast, pork meatballs, pork chops, salmon, vegetarian pastas, stir fries. I had a fattoush chicken salad today where, chicken breast was cooked perfectly juicy in the oven and it came with a fresh salad on the side. So nice hot, cold contrast. There's rotating menu. You can order as few as 3 items a week, as many as 12 if you'd like, or you can skip or pause at any point and continue using the oven for your own food. Okay.
Interesting. Fun. Let's, Yeah, I was looking at the site. There's looking like some pretty good. This everything bagel spiced salmon looks really good.
Yeah.
Yeah, that looks amazing. Okay, cool. And then the oven itself. So what, besides heating
Yeah.
food, what else does it do? What's the smart component? You mentioned well, you tell me. Yeah.
Yeah, yeah. So, the magic of the oven when it's tied to our meals is that the chefs have figured out how to cook every meal exactly the way they would if they had multiple appliances. So let's take this everything but the bagel salmon with beets on the side. When you scan the barcode for that dish, it will steam for about 3.5 minutes at 350 degrees. Then it will transition to a convection bake at 450 degrees for about 8 minutes. And then it'll finish on a high heat broil to get a nice kind of crisp on that everything but the bagel seasoning. And then about 13.5 minutes later, your meal is done. You get a push notification. Every meal has its own custom cooking cycle that's leveraging the different cooking functions, the temperature, and the time to cook the meal exactly the way our chefs intend.
That's interesting. And you said nationwide coverage. So, if I'm in, I assume this is all arriving in the mail and it's relatively fresh, even if I'm not in Chicago.
Correct. Yeah, we service the entire continental U.S. The meals arrive completely fresh on your doorstep. They'll last until midnight of the evening that they arrive at your home. And, most meals last about a week, give or take. Some of the seafood might last a little less. Some of the vegetarian meals might last a little longer. But yeah, we service the whole country and we have customers in every state.
I think one of the, I don't know, issues some of these meal delivery services get is all the packaging. Is there any way to reduce that, or is that just part of the deal with the devil that this is going to be a lot of, packaging? Yeah.
Yeah. I think we have done a good job of continuing to reduce the amount of packaging. And one of the differences between us and most of the meal kits is that we're not sending you every ingredient individually packaged. The meals are often pre-composed. You might get a raw protein, but that comes in one package. So it's generally less packaging than a meal kit service. The part that's hard to erase is the liner that kind of keeps the box cold, and then the gel packs that keep your proteins at temp. And in the summer months, we need enough there that the food will remain food safe, through transit across the country. So, there's some limitations, but I will say it is getting better as we get, better at doing the job. Other companies get more efficient at coming up with better solutions to keeping products safe in transit. And as we scale and open more facilities, it just takes less packaging to go shorter distances.
That makes sense. Cool. What was the backstory? What were you doing? Where'd you come up with this idea?
Yeah. So I was in business school here in Chicago at Chicago Booth. I'd gone there knowing I wanted to start something in the food technology space. I've been passionate about health and wellness for most of my life. And, I had a Sunday at my apartment where I was cooking using multiple appliances, and this moment of frustration that to cook my sweet potatoes, I needed the oven. To cook my protein, I needed the stovetop. To steam my broccoli, I needed this digital countertop steam device I had. To make rice, I needed the stovetop. So I was using 3-4 different appliances at once just to make one meal. Uh-huh. And, I realized everything I was doing was not anything special. I was just setting a temperature and turning a knob and then maybe changing that knob. And so I had this moment of, hey, couldn't you just automate that part of the process? And that was kind of the very beginning, the seed of the idea that quickly blossomed as I talked to more people, got a lot more feedback, and realized that, if you really zoom out and think about the whole problem, it starts at planning, and then it's shopping, and then it's the actual preparation, the chopping, marinating, seasoning. Then it's the cooking on the different appliances, and then it's cleanup. And I wanted to try to solve for all those things, but without giving up what I love about home cooked food.
That's good. Very cool. All right. Well, let's talk about raising capital. How much have you guys raised, and over how many rounds?
We've raised about $70 million of equity. And we just closed our Series C a few months ago. So several rounds of funding. Our first round of funding officially closed at the end of 2015.
Okay. Let's go through it a little chronologically. Was that a friends and family angel round? what did you have a actual physical component yet, or was this more vision and story, or what?
Yeah. So we went through a business plan competition at Booth called the New Venture Challenge. This was 2015. This was a competition that Grubhub had won about 10 years before us. Braintree had won 9 years before us. And then a company called Simple Mills had won the year before us. And several other successful companies had gone through it. And so at least within the Chicagoland area, the program has some prominence. And we won that competition. So that came with $70,000 of funding in a safe note. So that was our first kind of cash infusion. And that came, right as I graduated from school. At that point, we had one prototype that kind of worked that I had self-funded. And then that was kind of it. I didn't have a team anymore. My team was a bunch of classmates that had gone off to their real jobs.
The consulting,
yes.
Bain and BCG or something.
Yeah. They'd gone to consulting and CPG and finance. And so anyway, that summer I spent a lot of time trying to build the team and raise money. And that was difficult. We had one prototype that kind of worked and a vision, and my background was in food business, but not in engineering. So, you can imagine there were a lot of technical questions about how you're going to make a connected appliance and, build this whole supply chain and all these different things. So it was a challenging summer for fundraising. We did get a lot of soft commitments. So a lot of, individual angel investors, and then one fund in Chicago that did end up ultimately investing, all committed, but were waiting for us to get a lead investor, which pretty typical story. And then, met my co-founder that summer. We hired our first engineer and we applied to Y Combinator. And once we got into Y Combinator, this was Q3, Q4 of 2015, all of a sudden we had a lot more leverage for two reasons. The first, we got into YC, so that gave us a lot of credibility. And the second was that we needed a lot less capital because at the end of YC, we were going to go through their demo day and raise money again. And so we didn't need 18 months. We didn't need 12 months of capital. We needed 6 to 9 months. And so we went from saying we needed $1.5 million seed round to, we need a $300,000 cash infusion just to kind of get us through YC. And so all those investors that were kind of skittish and looking for a lead all of a sudden, wanted us to take their money. And so the one fund, Origin Ventures, which had soft committed at the time, said, hey, we want to take the biggest tranche of this. Let's negotiate a deal. And we did. And we ended up raising a little more. We raised $500,000 at the end of 2015. So that was our first round, called it a pre-seed round. We didn't really have much product and a very small team, but we raised that round and then we moved to the West Coast to go through YC.
Okay. So that would be 2016 then, or
we started YC in 2016. We were in the winter of 2016 batch.
Cool. Great. All right. I was going to ask, because this is an issue I think a lot of startups face, is they have a lot of put me down as a yes when you find a lead investor. And that's always how do you overcome that? I guess getting into YC is your answer there. Right.
Right.
Yeah.
I mean, for us, that was kind of the turning point, and it was really about just giving us some leverage. And we had two pieces of leverage. One was a hard deadline because of YC, and two was the credibility that came with YC. So, sometimes you have to manufacture it, sometimes it's real, but for us, it made a huge difference.
Any just high level tips on getting into YC? Did you analyze it afterwards, or did they tell you kind of why you got in, or any general tips for that?
Yeah, Michael Siebel was our partner, and I asked him afterwards at some point, and he's like, "Oh yeah, we didn't even like the food that you made for us. What we invested in, and how we make a lot of our decisions is, do we think this is the right team, the right 2, 3, 4 people to take this where it needs to go, and second, do we think this can be a $1 billion company? So is the vision big enough?" That's at least for us, those are the two things they were evaluating.
Yep, that's great. Awesome. Okay, let's fast forward a little bit. So you get out of YC, and then was it Series A right out of YC, or did you do
No, we actually ended up doing 2 seed rounds after YC. So one right after, which took about a month and a half to raise. It was not, at least for us, was not like a 1 or 2 day affair after demo day, which it was for some of our peers, but for us, it took us a couple months. We raised $1.6 million. And then we raised another $1.6 million at the end of that year. So one was kind of in May of 16, and then the other one was at the end of 16. So we ended up having 2 seed rounds.
And how'd you put those together? Was a lot of it working through the YC network or other approaches?
So the first one was, mix of YC alums and, some funds that we had met at demo day. And then everyone that had invested in that pre-seed re-upped. But it was not as easy of a round as I think we expected coming out of YC. We thought we'd have that halo and, demo day, you get up and pitch 700-800 people at once. But at least for us, I think with hardware, there was some skepticism. We were still very early. And, there was kind of some good stuff happening in the food tech space, some not so good stuff. And I was pretty green. I hadn't raised that much money at the time. So I definitely made some mistakes that in hindsight became clear. And so it was a hodgepodge. Our biggest check was maybe $400K from Origin Ventures, who was in the pre-seed. The rest was 25 to 100K checks that added up. We did 2 Angellist syndicates in that round and kind of scratched and clawed it together and got 1.6. The second seed was much more interesting in some ways. The big difference between those 2 rounds is post YC, we had very early prototypes that worked, but we very much leaned into our scrappiness and where I felt this would be a positive, now in hindsight, I think it was a negative. It really did not allow for the investors to visualize what this would look like as a consumer. I'll give you an example. We were walking into these rooms, bringing an oven in a large Pelican case, unloading that. It took us a long time to set it up. We'd bring our food in Tupperware in Whole Foods bags. There was no brand that was being represented. It was just product. Yeah. And, this is a consumer brand, and that was totally lost. And, what I was thinking at the time is, they'll give us a lot of credit that we're being really scrappy right now. Like all we need to prove is, do people want to pay for this product? And then we can worry about building a brand. But I think it kind of prevented people from being able to see what this thing could really look like and how it could evolve. Yeah. Fast forward 6 or 7 months when we went to raise that next seed, there was some brand. The packaging was done. The app was working. We had some meals that were fully designed. The oven looked a little better. And that was the easiest round of funding we'd ever had. We had 7 different investors, 6 of them committed. Most of them were investors that we'd met with in the past that had said no. And that ended up being a great round of funding for us.
Yeah, it's interesting. Talk a little bit about the Angellist syndicates. How did that play out? How do you almost, if you were telling someone else who was seeking your advice, how do I get backed by an Angellist syndicate? How did you find someone to do a syndicate around you, and how did it sort of ultimately play out?
Sure. The only caveat I would add is I think the platform has evolved a fair amount since, we really leveraged it. This was, mid 2016, but we had 2 individuals that ran syndicates that we met and got to know personally. I think that was kind of the key. So, one had written a personal check into us in the pre-seed round. And so we got to know him pretty well. And, he was the one that approached us and said, "Hey, I want to syndicate this round. I want to put it on the platform." And, he was based in, this is Nick Moran. He runs his own fund called New Stack Ventures now. Most of Nick's syndicate investors were based in Chicago. And so, we held an event. I was able to meet a lot of them in person. We did a demo. So, it was a little more heavy handed, but I think we ended up raising 100 or 150 grand through that syndicate. So, at the time it was well worth the effort. And then the other syndicate was run by a guy named Sandeep Ahuja, who we'd met through YC Demo Day. I guess the one thing is, this was obviously pre-COVID, but, we met the people that were leading these syndicates. They bought in themselves. And then they went about pitching it to their group. So that was the reason. I think, had we not met them, it wouldn't have gone anywhere.
Mm. Okay, interesting. Good stuff. Talk about well, let's just carry through the rest of the rounds, and I got a few more general questions. I don't know, anything from the Series A, any anecdotes? And I think I saw that you did an OurCrowd fundraise. Was that a crowdfunding or was that something else?
So OurCrowd was during the B, and I can talk about that. OurCrowd is, I think, the largest crowdfunding platform in the world. What's different about OurCrowd is that they operate much more similarly to a traditional venture fund, and that you have to go through a typical diligence process, and they've got a large internal team that's screening these deals. Very few deals make it through the pipeline. And they also have their own internal fund that will co-invest. And they do a lot of deals. Maybe it's 50 to 200 deals a year, but as a percentage of what they see, it's still very low. So for us, we turned down traditional venture capital to go work with them, because we really liked the global platform that they had, felt like they would be able to add value in different ways. It was not that much work for us. We got on the phone with a few of the larger potential investors, but for the most part, once OurCrowd signed off on the deal, they kind of did the heavy lifting on getting investors to back us.
Okay, so that was B. Good, got it.
Yep.
And they're an Israeli sort of venture fund / crowdfunding platform.
Correct.
Right?
Yeah, they're based in Israel. Their LPs are all over the world, but they're based in Israel. Got
it. Interesting. We sort of skipped Series A. Was there any interesting anecdotes there? Any stories to tell or challenges for Series A?
I'd say the challenge for our business with the A was that we'd spent a lot of time talking to investors pre-Series A about what do we need to prove to go raise the A, and for us there were only really two things that it kept coming back to. The first was, will this business actually work and get off the ground, because it's so complicated? Like, is the hardware going to work? Are you going to be able to ship food every week? Is that food going to, cook properly? Yeah. Just operational complexity for a small team. And then the second is, will people stick around? Churn has plagued the meal kit industry. And, at that point, it was starting to become more obvious that was going to end up really harming a lot of our competitors, but it still was not like a mainstream thing yet. So those were the two things that were kind of laid out for us. And, a month after we launched, we felt like we'd proven both. The retention data was still early, but it was very positive. And so we went out maybe 3-4 months after we launched. And what had happened by the time we went out to raise money was that Blue Apron had gone public. It was not a good IPO. Amazon had bought Whole Foods around that time. And so investors started to get a little skittish about investing in food tech. And then a company called Juicero, which some people remember, they didn't go belly up at that point, but around that time, I don't know who, but the person realized that you can squeeze the packs without the press. And so all three of those things happened within a few month period of each other. And right around the time we went out to raise our Series A, and very quickly the market turned on us. So even though we had accomplished kind of the two big question marks investors had, all of a sudden they were asking us, well, why aren't you growing faster? Why is your CAC high? Like, what are your channels for acquisition? And, I maybe naively was like, well, we haven't spent time figuring that out yet. Like, we've kind of figured out the two main things we needed to. Right. That's what the capital is for, is to help us figure out how to grow. And, I think because the market had kind of turned, it made raising that round a lot harder than we'd anticipated. And it did end up coming together. Origin Ventures stepped up and led that Series A at the end of 2017. And, it ended up being a $9 million round. So it was great. But I'd say, the feedback from those investors, while it was frustrating, in hindsight, there was some truth to it. Like, we didn't have product market fit. We had customers that loved our product, and incredibly strong retention, but we didn't know how to sell it yet. And it took us longer than we thought it would to really figure that out.
It's interesting. General question: when you're out fundraising and the market kind of the headwinds or the tides turn against you, is there any like remedy? I mean, I guess, do you just kind of head down and plow ahead, or, talk to more investors, or do you twist your pitch or tweak your pitch a little?
Yeah, I mean, I think for us, we've been fortunate to have supportive insiders that really believe in our team and our vision, that have stepped up. And I think cultivating and building those relationships has been really important to keeping us afloat. So I'd say that's first and foremost. I'd say second is, at least for me, it's continuing to pound the pavement. It's like dating and meeting your spouse. Like, you just need one oftentimes. And the vast majority of people will say no, but a big piece of being a founder CEO that's in charge of fundraising is building up the coping mechanisms to deal with hearing no over and over and over again, and not letting that get in your way. And I think you should learn, right? Every pitch you have is another opportunity to test something a little different and figure out what's working and what's not working. But I do think it is about persistence.
Yeah, good. Okay, Series B, or we already talked about Series B. Let's go to Series C real quick, and then a few general questions. Series C was fairly recent, right? That was February.
Yep.
And I'm seeing some other, I don't know, what was notable about that? I'm seeing some other companies on here like Pritzker and Comcast and things like that. Maybe tell us about that one.
Yeah, so Comcast first invested in the B. Pritzker actually invested in our seed initially, but real quick on the B we raised really at the beginning of the pandemic. So that was an interesting round. It was before most funds had kind of figured out how to navigate the pandemic. And so for a few of the funds, it was the first time they'd ever done a deal virtually. And, it came together nicely for us, but was quite a stressful time, I'd say. And, we had to find ways to do things that we hadn't done before. So that was the B. And then the C was with a group, Left Lane Capital, that we had gotten to know quite intimately over the year and a half prior. And that round came together very quickly. They know our industry inside out. They knew our team inside out. It was a great fit on both sides. And, our business had a great year last year. So it was really, a great round that came together.
So for B and C, in contrast to maybe Series A, I guess, I like how you framed it. For Series A, you're like, will it work? And, what's our retention like? For B and C, was it like, here's our product market fit and our proof that we can scale marketing? Or what was sort of the key questions that you were addressing then, or, other things?
Yeah, I'd say for B, it was, hey, we've got what we feel like is enough data that we can pour gas on the fire and grow. And I think the question marks were like, is it enough data? And what's going to happen to your cohort retention as you're scaling? And then that's my sense of maybe kind of middle of the strike zone of a Series B is, you probably have enough data, but where you're going to lose investors is they're not convinced these will hold as you scale. The C was a little different. The C was, we have scaled for a good year and a half. Do we believe we can continue scaling? And I think, part of what was probably unique about our C and most of the rounds that closed in the last 6 months is what's going to change post-pandemic. Consumer behavior, advertising markets, things of that nature. What effect are they going to have as you scale? I think if you take that aside, the C would have been pretty standard of, hey, we're scaling these channels. We want to keep scaling them and add more channels and scale our operation. But, we've kind of figured it out. And at this point, it's how do we do it better? How do we do it faster? How do we do it cheaper?
Yeah. Maybe I'm sure I'm oversimplifying many things, but like Series A, you sort of have the market going against you with, like you mentioned, Blue Apron's IPO not doing very well and Juicero struggling. Now Series C, I guess, pandemic must have been a huge boon for you, right? Everyone's at home cooking. You can't go out. So I don't know. Yeah, I guess that would, what's my question there? I'm not really sure. But it's, I guess what is the answer? Like, how do you you've clearly benefited from the pandemic's hopefully ending, knock on wood. how do you sort of address concerns that, hey, we're going to be fine even when people start to go out to restaurants in Chicago? And
yeah, no, it's a great question. I think, my own hypothesis is that consumers have found much more convenient solutions, pandemic or not. And while there will be this boomerang effect over the next few months as people kind of over-index on the things they haven't done. Sure. I think come, back to school in the fall, people are going to be busier than they ever have been, and more convenient solutions, I think, will continue to win. I don't think the Instacarts of the world, the Pelotons of the world, the Tavalas of the world are going to be worse products in the fall as they were last fall. I actually think in some ways they'll be even more relevant. Sure. And so I feel very good about our chances. And I'd say, at least for us, we definitely benefited from a pandemic boom, but less so than other products where the upfront investment wasn't there. Consumers still had to think about the permanence of buying our product and putting it on their countertop in a way that, you really don't if you're ordering one grocery delivery or one box of produce. And that's why we've remained bullish, about what this business will look like post-pandemic, even if there is, a small dip in the summer.
Yeah. Interesting. Okay. Couple general questions and I'll let you go. Just any general tips for raising capital for a hardware startup? This is a question I get all the time. I know it's like much harder. Any just, advice you would give other hardware founders in terms of their journey?
Yeah, it's a really good question. I think, I guess I have a lot of tips. I think,
go for it.
However you can bolster your credibility, largely through your team, probably on your ability to build and manufacture hardware. And often those are a little different from the prototyping is one thing, but scaling manufacturing and building a supply chain is another. And I think great people can help alleviate concerns there. I think secondarily, one of the things we did with our hardware is, we tried to rely as much as we could on existing suppliers, existing technologies, existing manufacturing lines, in order to reduce our risk, reduce our capital expense, allow us to go to market a lot faster. And I think that's probably the case for a lot of hardware that's out there. It often doesn't have to be built custom from the ground up. Mm-hmm. And that's a great way to reduce your risk and, help investors get more comfortable with what it'll take. Those are two. And then I'd say one more philosophical one for us. We really felt like we wanted to get to market as fast as possible, which is not often the mentality of a hardware company. Mm. For us, it was, what are the key assumptions we want to validate? How do we do that as cheaply and quickly as possible, even with hardware? Learn those things. And then over time, we can invest more and more in our hardware. And so, we haven't spent millions and millions of dollars in hardware R&D. Mm. And it's because we understood what role hardware plays in our consumer journey. And
all right. And then one more general question, any, tips or resources for Chicago startups? Like what's the if you're coaching, advising a fellow younger booth entrepreneur who wants to kind of break into the Chicago startup scene or venture scene, where would you sort of point them? Go.
Yeah. It's a great question. We've really benefited from being in Chicago. I think there's great startup hubs in a lot of parts of the country. And, we made a deliberate decision to leave the Bay after Y Combinator to come back to Chicago, where we had some roots and in particular connections to a few of the major universities here. And those have been great for us. We've hired a ton of people out of the University of Chicago, out of Northwestern, out of the University of Illinois. And if, an aspiring entrepreneur has gone to one of those schools, I think the first thing I would say is leverage those schools to the hilt. Mm-hmm. Reach out to the alums, go meet everyone in the entrepreneurship centers, get to know them, meet your professors. A lot of the professors are deeply connected. That's I don't want to say it's easy, but it's low hanging if you're at school. And I don't think everyone realizes the depth of the connections that exist there. I'd say that's first. And I think second, the founder community here very much has a pay it forward mentality. And so, try to meet other founders, other entrepreneurs, get advice from them, and they'll open doors for you to investors and other folks to meet.
Yeah. Awesome. Is there any co-working space or startup hub that, people should hang around at?
Yeah. At least,
Yeah.
yeah. For us, we spent some time at 1871,
Yeah.
which is the largest incubator in town, I think. And then M Hub in particular for hardware startups is another great one.
Mm.
And then the Polsky Center is, a hub of entrepreneurship in the city. And then the Hatchery for food startups in particular. So, I'm sure I'm forgetting a bunch, but those are four that come to mind that are great places to go.
Those are great. All right. Any last question I always ask? Any other tips we haven't covered, or any advice you would give your younger self if you were doing this all over again?
One of the funny things I remember when I was early on in this journey is I think, I told a friend of mine, I'd read a blog post by Fred Wilson, and I think Fred Wilson had said, we almost only back first-time founders. And I remember telling my friend, I don't get that. If I had 5 or 10 years in this thing, I would be so much wiser and smarter, and I've made all these mistakes. And, and now I kind of see the wisdom of Fred in some ways. I think first-time founders don't know what it takes, what it will take. And I think you have to have persistence and grit to be able to make it through. But that naivete in some ways allows you to go after something that it might be bigger than you would if you had gone there and done it before.
I like it. That's great. The magic formula: persistence plus grit plus naivete. Yeah, that's good. All right, David, this is super great. If people want to learn more, or can they order directly from the website, or where
they can? Yeah, just tovala.com, TOVALA. It's the best place to learn more about the product and the service, and to order one if you'd like. Excellent.
Cool. Any special Memorial Day weekend recipes that are going to be released, or
there's I want to say there's a barbecue chicken and corn recipe that's on there for the weekend. So yeah.
All right, David, thank you very much. This is great. We'll catch you after your, Series D, Series E, after you go public. How about that?
Yeah, from your mouth to God's ears.
Yeah. All right. Have a great weekend. Thank you
you so much.